I'm speaking with Clark Koury, Head of the Product Specialist Group at Oaktree Capital Management. Clark, first of all, thank you very much for coming all the way from Los Angeles to participate in the Inside Networks Income and Defensive Assets Symposium. We really appreciate it.
Great to be here. Thanks for having us.
It's great to have you. Clark, can you give us a brief history of Oaktree Capital Management, including its founders and how the firm has evolved over time?
Yeah, so many folks in the financial space know Howard Marks and Bruce Karst. They're really widely considered financial luminaries in the field. They founded Oaktree Capital about 30 years ago in 1995. At that point in time, we were really a pioneer in the alternative credit space. And when you think about the landscape of peers that exist in the marketplace, many were born out of private equity. Others were born out of more traditional fixed income investment grade investing, and few really focused on the alternative credit or really below investment grade space. And that's really where Oaktree's foundation was built. When you think about our platform today within the credit space, we really have three main buckets. The first is our performing liquid credit business. We have a performing private credit business, and we have a opportunistic credit business. And roughly each of those are equally sized in total and represent about 75% of our AUM. And we have, in each of those areas, have been investing as one of the earliest investors in those respective spaces. So we have a long track record of success and really minimizing losses in each of those investments.
And when you think about the educational space in this asset class, Howard's letters to investors have become really the equivalent of Warren Buffett's in the equity space. They're very, very widely followed and revered almost for their insight.
Absolutely. I think our clients in particular really value the memos that Howard puts out and his thought leadership in the space, and really look to him as a predictor of market trends. And we make the joke at Oaktree that we've predicted 5 out of every 3 crises that have existed.
How have those roots of the firm in opportunistic credit shaped your current approach to performing credit?
Yeah. I think first and foremost, Oaktree has a unifying investment philosophy that really applies to everything we do within credit, whether that's performing credit or opportunistic credit. And really that philosophy is centered around risk control. And so we're always thinking about ways, really what can go wrong in any situation. And that opportunistic credit lens is a really nice way to predict or to think about things that could potentially go wrong in certain situations. And in a performing credit lens, where you're really looking to avoid those bad outcomes, those workout situations, those restructurings or equitization events, that can become increasingly important.
And where is Oaktree seeing the most compelling private credit market opportunities right now?
Yeah, it's a great question. I think there are certain parts of the market today that we feel like are a little overheated. And when the market becomes frothy, you start to see trends that are adverse in many ways. You see deterioration in pricing or spread compression. You see deterioration in terms, and oftentimes you see increasing leverage. And we're certainly seeing that in some parts of the sponsor lending market today. At Oaktree, we built our capabilities around other parts of the private markets that are a little bit less trafficked, and that's because they're higher complexity. There's challenges with underwriting some of those things. So areas like non-sponsor lending, which is really lending to publicly owned businesses, is an area that we like a lot. We also see a lot of opportunities within the life sciences space, and that's driven by some secular tailwinds, aging population, continued technological advancement within certain medicines, particularly in the rare and orphan disease and oncology spaces. We also like asset-backed financing, particularly private asset-backed financing, where you're seeing a little bit of a void of capital or an underserved part of the marketplace. The last point that I would mention is Europe. We like Europe for 3 reasons. The first is you're generally seeing more attractive pricing than you are in the U.S. The second is you're generally seeing better structures in Europe today in terms of lower leverage, slightly lower LTVs than similar deals within the U.S. And then the last point is there's some insulation from tariffs within Europe versus the United States.
How do you balance flexibility with risk control in your credit strategies?
Yeah, so being nimble is really important. And we like to think our strategy employs what we call an all-weather approach. And what that really means, most simplistically, is that we can invest really in any market environments, and having the ability to shift to different parts of the market based on relative value is critical. We don't want to be a one-trick pony or have a myopic focus on a single part of the private market. As an example, we like having the ability to shift in weak markets to more capital solutions oriented transactions that offer much better risk-adjusted returns at certain points in time. So that relative value piece is increasingly important.
Clark, 3 decades of corporate memory within Oaktree. What lessons from past market cycles are you feeling might be most relevant in today's environment?
Markets tend to oscillate between extremes, and that could be bullish or bearish. And what we find is that those swings are often poor indicators of economic health and, frankly, of borrower health. And so for Oaktree, we really tend to focus on company fundamentals. And one of the benefits of private credit is that you really eliminate some of that sentiment that can drive price fluctuations in the public markets, whether they be credit or equity.
Clark Koury from Oaktree Capital Management, thank you very much for your
Absolutely.
time today and for being here with us at the Inside Network's Income and Defensive Assets Symposium.
Thank you very much.